Cryptocurrency has captured the imagination of investors, technologists, and policymakers around the world, presenting opportunities for innovation and, at the same time, introducing new challenges. To understand the current state of cryptocurrency, let's begin by looking at the landscape in 2024, and then explore where this technology might be headed in the future. Currently, cryptocurrency is in a transitional phase. The early days of wild price swings and headline-grabbing stories of overnight millionaires have given way to a more mature, nuanced understanding of what blockchain technology and digital assets can offer. Bitcoin, as the original cryptocurrency, remains the most prominent and widely discussed, but the ecosystem now consists of thousands of different coins and tokens, each serving different purposes. Ethereum, for example, has become the backbone for decentralized applications and smart contracts. Meanwhile, newer chains like Solana, Cardano, and Avalanche are competing for technical superiority, scalability, and developer interest. One significant trend in today's crypto space is the increasing role of regulation. After years of largely unregulated activity, governments and regulatory bodies around the world have begun to clarify the legal status of cryptocurrencies. In the United States, the Securities and Exchange Commission has taken action to better define which digital assets constitute securities. In the European Union, comprehensive frameworks like the Markets in Crypto Assets Regulation, MiCA, are being developed to create uniform standards. This push for regulation brings legitimacy and investor protection to the industry, but also imposes restrictions. For many, this is a welcome step toward mainstream adoption. For others, it signals the end of the Wild West era of digital currencies. Another crucial development is the rise of institutional involvement. Where previously cryptocurrencies were associated primarily with retail investors and tech enthusiasts, 2024 has seen major financial institutions, hedge funds, and even governments taking an interest. Large Wall Street firms now have digital asset divisions, and Bitcoin ETFs have launched on several major stock exchanges. This institutional presence has helped reduce volatility in some markets while bringing new sources of funding and innovation. At the same time, central bank digital currencies, or CBDCs, are rapidly approaching deployment. China's digital yuan is already in use in several cities, and more than 100 countries are exploring or piloting their own digital currencies. CBDCs aim to combine the speed and efficiency of blockchain technology with the full backing of government authorities. The coexistence of decentralized cryptocurrencies and state-backed digital money is likely to reshape the global financial system, affecting issues like monetary policy, cross-border payments, and financial inclusion. The rise of decentralized finance, often referred to as DeFi, is another defining feature of the present cryptocurrency landscape. DeFi platforms use smart contracts to provide services such as borrowing, lending, and trading, all without the need for traditional banks. Billions of dollars are now locked in these protocols, proving there is real demand for permissionless, transparent financial services. However, DeFi is not without its dangers, as vulnerabilities in code and outright fraud have led to significant losses for some participants. The maturation of DeFi is a work in progress, balancing innovation with necessary precautions. NFTs, or non-fungible tokens, emerged as a major trend in 2021 and have since found use cases beyond digital art. Today, NFTs are being integrated into gaming, music, ticketing, and brand engagement, offering new forms of digital ownership and participation. Large brands and artists have successfully tapped NFTs to engage with fans, while others caution that the market's enthusiasm sometimes outpaces real utility. As the hype cycle cools, the lasting impacts of NFTs are still being determined. Sustainability concerns also remain central to the conversation. The environmental impact of cryptocurrencies, especially proof-of-work coins like Bitcoin, has drawn criticism. However, there is a shifting tide. Ethereum's move to proof-of-stake, which reduces energy consumption dramatically, and the growing prominence of eco-friendly chains signal the industry's response to climate change concerns. Innovations such as renewable energy mining and carbon offset initiatives further demonstrate the sector's willingness to adapt to global priorities. Security is another area of continuous development. While blockchain technology is, in theory, incredibly secure thanks to its decentralized ledger, exchanges and wallets remain popular targets for hackers. 2024 has seen sophisticated security solutions, from multi-signature wallets to hardware devices, making it safer for users to store and transfer digital assets. Regulators and industry leaders recognize that trust in the ecosystem hinges on robust cybersecurity. Public perception of cryptocurrency has also evolved. No longer just a speculative gamble or a tool for those evading traditional financial systems, cryptocurrency is increasingly understood as both a technology and an asset class. Universities are teaching blockchain development. Large corporations are exploring blockchain for supply chain and identity verification. And philanthropists are using cryptocurrencies for fast, low-cost international remittances. Looking toward the future, the trajectory of cryptocurrency seems poised between two contrasting forces: integration into the mainstream and the preservation of its decentralized ethos. On one hand, we can anticipate a world where cryptocurrencies are as easy to use as traditional money. Everyday transactions, from buying coffee to wiring money to relatives across continents, could happen seamlessly, instantly, and at a fraction of the current cost. Digital wallets may become ubiquitous, with users holding not just dollars or euros, but also tokens representing everything from real estate deeds to airline miles. On the other hand, issues of privacy, autonomy, and control remain at the heart of the crypto community's values. As governments roll out CBDCs and regulate the sector, there is an ongoing debate about how to ensure that the decentralized promise of cryptocurrencies is not lost. Privacy-enhancing technologies, community-owned networks, and solutions like decentralized autonomous organizations, DAOs, are being developed to preserve user control and minimize centralized oversight. In essence, the future of cryptocurrency will likely be shaped by how these competing forces balance out. If history is any guide, innovation will occur rapidly, and the rules will be written and rewritten as new challenges and opportunities emerge. Widespread education and user-friendly design will be essential if cryptocurrencies are to realize their transformative potential rather than remain a niche experiment. Ultimately, the present state of cryptocurrency can be described as a period of refinement and integration with the broader financial world. Its future, though uncertain, is undeniably influential and full of promise. Emerging from its turbulent beginnings, the world of crypto is entering a new era, one where it could cement itself as a bedrock of global finance, facilitate unprecedented innovation, and, perhaps most importantly, change the way we think about money, value, and ownership.